This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is a weekly wrap up with Verified Investing.
Hey folks, welcome to the weekly wrap up. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So markets did have a rally today. This is on the back of the CPI data. I think we can all agree that most likely these numbers snuck out yesterday, and that's why the markets opened flat and rallied up into the end of the day, pretty much all day long into yesterday's close. And then we got the numbers today, and it continued the party on Wall Street. All right. So again, now the question is, are these fake numbers? The answer is probably yes, but the markets don't seem to care at this point. And I think that's a really important aspect. So taking a look at the CPI data today, I predicted this yesterday. I said, guys, they're not going to be releasing the one number the government's releasing during a shutdown 5 days before the Federal Reserve. It's not going to be heavier or higher inflation. It's going to be a better than expected number. That's just obvious. At least to me, it's obvious. I hope it's obvious to you guys as well. If it was hotter, they wouldn't have released it. And the question is, was it? Did they fudge the numbers? Who really knows? And frankly, who cares at this point? It is what it is. But the answer is, you can see the numbers. Each number, CPI year over year, core CPI year over year, month over month CPI, core month over month, all of them came in perfectly 1/10 better than expectations. Remarkable how perfect those numbers can be when you get to have a little eraser and muster and change them up just a little bit. Okay, so listen, markets moved up. We're going to look at the charts. Before we do that, I want to show you what type of day it was. It was ridiculously quiet. The S&P 500, look at this, guys. The S&P 500 today staying in an insanely tight range. I mean, there was literally almost no movement. I mean, look at this. From the opening, we had a little uptick. And then look, basically from 11:30 a.m. Eastern time, we went perfectly sideways, a little bit of profit taking into the end of the day. But it's remarkable how dead the markets were today and how controlled they appeared to be. All right. In other words, the algo's just trading back and forth. You give a little bit of retail bullishness there, and it keeps the markets floating. And that's exactly what we did. Now, more importantly for us as longer-term technicians, this is something we need to watch. So this is that trend line. We have now officially recaptured it. What that does is it takes the warning sign off the market, at least for now. Now, if we close back below that next week, warning signs come back on. Now, having said that, I've said to you guys, there's very little upside until we break major levels. All right. And this is probably the most important thing that I'm going to talk about today. It's these two levels on the S&P 500 that the S&P must get through if it's going to have a significant move up. So, if you're thinking 10% into year end, next year maybe 20% upside, to do that, we have to get through these major, I repeat, major levels. Let's go back. So I'm going to take this one off for now because I just want us to focus on these. All right. Now, if we zoom out, number one, we have a level that goes back to October of 2023. This is the one we've used all along to these lows, right? So the low here and the low here. This was the August 2024 correction in the markets and the correction in January of 2025. Obviously, the Liberation Day sell-off occurred. As we came back, we hit the line, we pulled back, we hit it, we pulled back. We're getting very close. We're not there yet, but we are very, very close. Now, I'm going to remove that line because I want us to focus on this one. This is a bigger parallel channel that literally goes back to the COVID low through the lows here of the bear market in 2022 to the low here in November of 2023 to the Liberation Day sell. Look at how all of those perfectly align on this trend line. They literally right to the trend line, right to the trend line, right to the trend line. Then what we do is we stretch it up to the highs right here from the bull market of 2021 and what's coming up into play right here. And so again, when you have that line that we just took away that goes back to the October of 2023, I'll put it in one more time right here. We have this line, which has these pivot points along it, and then the rejections right here and here. All of those are coexisting right above price. And what that does is, to me, while the markets I look at as being safe, and let's be clear on this, It's not just that we're going to close back above. And by the way, we're getting a little sell-off. I mean, we're still up about 0.8% on the S&P, but decent little sell-off. But it's also that the wide range candle is now going to get closed above. So here was your wide range red candle high to the low. We've now closed above that today. And so that's why it takes the warning away on the market in the near term. Now, it doesn't make me go ridiculously bullish. Why? Well, because very simply, we have to get through this area right here. Now, you get through this area, all right, that would be impressive. I would be impressed at that point. Then you can start to see a melt up into year end. But this one right here is what I'm focusing on the charts going into the next week. Now, remember, next week is epic. Not only are we going to get the Magnificent Seven, a bunch of them to report, Meta, Microsoft, a bunch of these names that are multi-trillion-dollar companies, but we also have the Federal Reserve. Next Wednesday afternoon, Jerome Powell will give his press conference. He's going to tell us that there's a 25 basis point rate cut. But the question is, does he act dovishly or is he hawkish? All right. My other theory, too, is notice how the government shutdown is still going on. I almost wonder if the Republicans, mainly Trump, he does not want to end the shutdown before the Fed meets, because I think that adds additional kind of question marks about the economy and the economic implications. So not only did they post a CPI number today that was less inflation, whether it's true or not, we don't know, but it less inflation, but also, you want to have as much uncertainty for the Fed as possible going into Wednesday. So you don't want to have a resolution to the government shutdown before that point. So now it wouldn't shock me if by late next week, we do see a resolution on the government shutdown. And again, just putting together some pieces of the puzzle here, connecting a few dots for you guys, which is what I love to do in these weekly wrap-ups going into next week. All right, couple charts here. The 10-year yield, not much going on here, guys. Again, 10-year yield remains right at 4%. We're just below 4%. I still think eventually we're heading down to about 3.45 to 3.5%, lower end of the parallel. The dollar almost had no movement today, which, by the way, the fact that the bond market, and I think this is an important point, guys, the fact that the bond market and the currency markets didn't even flinch at the CPI data that was better across the board than expected, to me, that tells me that they're not buying it. They're not saying that those numbers, they basically are like, all right, just ignore those numbers. They're not real numbers. That's at least the way I'm taking it from the fact that the bond market and currency markets are not moving more on this news today. All right, take a look at this, guys. This is a big deal. The SMH, just like the S&P, is into major resistance. COVID low here connects it through the highs of 2024. We hit it, we pulled back. We kissed it, we pulled back, and we hit it again today. What happens next week to the SMH? All right, look at NVIDIA. Now, this is interesting. So NVIDIA rallied today, but the question is, did NVIDIA get out of its warning zone? The answer is it didn't. So you almost have to say here, wait a minute. S&P was able to get back above. NASDAQ didn't, in all fairness, but the S&P was able to get back out of its warning zone. The semis are into massive resistance, and NVIDIA could not get out of its warning zone. It's staying in that. Now, what do I mean by that for those of you that are tuning in that are new? Well, we closed below this major trend line here. Now, we didn't confirm. We never had a candle that closed below the low of that first close below, which is that's the one that you have to confirm below. That's the initial trigger, right? That's the trigger. That's the lighting of the fuse. Now, even with today's rally day, we didn't get back above this trend line. And so what it does is it tells me that at least for NVIDIA, this is still in a warning zone. And that may tell us also that the semis are still vulnerable to a pullback off this level. Now, flipping over to a couple others here, we had Tesla today, one of the few stocks down. There weren't many stocks down in this market. This is one of them. Tesla was down about 3%. So nice little drop on that. In all fairness, it had a big move up yesterday off of earnings, and then it came right back in. You know, another ridiculous move. Look at IBM. Look at this. So IBM yesterday was one of the big gap downs on earnings. It rallied back yesterday, closing slightly negative, and ripped today. But look at where it went. Now, it did pierce. Here was double topped, and obviously it went through that, so we can get rid of that for the time being. But look at this trend line. Short-term low from April. This is the April low. Look at how it came gapped below, hit, came back in, hit, big pullback, and then look at what we tagged today. This should be a pullback on Monday. This is going to be one of my top priority trade setups for Monday for a day trade, looking for a pullback on IBM. Ford today, good move on Ford on the back of earnings, up 12%. It did fill a gap right up here. So again, good move. We'll see if it's sustainable or not. Gold again, it basically is chopping. Notice again, this was your pullback in 1980, the first candle in 1980 after the 79, 9 weeks up in a row. We got the same sort of thing. Obviously, it was not as dramatic of a reversal, but this is what's making me nervous about gold. What kind of pattern is gold forming? All right. If you've been watching me for more than a week or two, you should know this pattern formation, folks. That's a bear flag. Okay. So listen, it's an immature bear flag. I'll be the first to say that, but it is a bear flag. So if this continues, this would tell us that the odds are starting to favor a turn down further on gold, which then brings my key target levels into play. Now, what's so fascinating, notice how, do you guys see my target levels of why I chose them here? Because look, you broke above and then you kind of consolidated, and these lows right here, like these lows right here, and then this high right through here, right? So you can see that there's a reason why those levels were picked as key support on the charts. But to add amazing factors to it, do a Fibonacci retrace, and look, 382 aligns with my first level. The 50% retrace is almost identical. The 618 right there. And look, even my max drawdown level is right there at the 786 Fibonacci. That's cool stuff, guys. That's how, again, you get multiple factors. Now, these first levels for me, these first two levels would be levels where I would only be looking for a short-term quick trade. Like we hit it, maybe we get a quick bounce, right? A day trade, a swing trade overnight, couple nights. Same thing here. Once we get down towards this, and definitely down here, this is where I start loading for what I view as eventually new all-time highs on gold. So I want to be clear on that. Listen, the government shows no signs of controlling their debt. We hit 38 trillion this week, right? It is spend, spend, spend. I mean, heck, there's a new ballroom going up, 300 million there. You know, I mean, like more money than I can even fathom, right? It's just left and right, spend, spend, spend. So much for Doge and Elon Musk back in the day. That was such a great dream, right? You know, to think that the government was actually going to be cutting costs and spending wisely. Stupid of us. And I'm including myself in that for even thinking that might be reality. All right. It's just not going to happen. So as long as that's the nature of it, as long as our debt levels are where they are, buy sharp pullbacks on gold, silver, platinum, palladium, and Bitcoin, frankly. I mean, what else do you do? What else can you do? I mean, if you look at the value of a dollar from the 1920s to now, it's literally lost 99% of its value, of its buying power. That's all you need to know. And it's only gotten worse in the last 20 years or so, 10, 15, 20 years. All right. Anyways, guys, it is what it is, right? We just got to trade it. Silver, that's a bear flag starting as well. Granted, it's immature. My target here is going to be around $43, upsloping trend line right here, connecting these recent lows. That would be my first big buy level on silver, around 43, maybe 43 to 44. Oil today. Now, oil had that big pop as sanctions did hit Russia, but we did see a little bit of a pullback off this level. Again, it wasn't extended enough for me to want to short it, so I'm going to stay on the sidelines. It is a good level of resistance, but the risk reward does not match up there. Natural gas, remember, nat gas broke out this week. It is stalled out. If it pulls back to the scene of the crime, I buy the pullback, right? I don't chase breakouts. All right, so let's be clear on this. When something, let's say, here's your line. When let's say we're trading like this and we go like this and we break out, I'm not buying up here. What I'm doing is I'm waiting for the retrace to the scene of the crime, and then I'm buying. You know, when you buy up like this, it's like, you know, like you're paying up. It's like, you know, like imagine you go to a grocery store and you're walking over to like the milk aisle and you're like, oh, I got to get some milk, right? And you're like, holy crap, a gallon of milk is $30. And then in markets, for some reason, investors are like, $30, I'll take 10 of them, right? I mean, that's what they do. That's the mentality. That's the FOMO. But in reality, you know, you wouldn't do that in the grocery store. So why do you do that with stock? Instead, you say, okay, It obviously broke out here. This is bullish for milk, but let me wait for the retrace. Let me wait for prices to come down. I can miss. I don't need to drink milk this week. I'll just drink water or I'll drink beer. Heck, beer. Let's go with beer. The point being is that you want to use your same mentality that you use when you go to the mall or the grocery store or anything when you trade and invest in stocks. Don't chase, let the prices come back in. Worst case, you miss the trade. And as I always say, there's always another trade around the corner. All right, Bitcoin guys, real quick. Now, Bitcoin is interesting. Why is Bitcoin not making a bigger move? Like, think about it realistically. So, risk assets are, especially stocks, new all-time highs today. Great move on a Friday. CPI was good. Why isn't Bitcoin making a move? Why is Bitcoin still down 15% off its all-time highs and actually below major resistance now? That's something that, again, I'm not going to make a mountain out of a molehill for the equity markets, but that's concerning. If it was really all in risk, Bitcoin should be flying here. Instead, it's stuck still below my pivot line. And as I explained in the game plan this morning, as long as it stays below the pivot line, this is actually bearish right now. This could even be the beginnings of a bear flag formation. Now, if it can get above this and confirm, maybe it goes back to the all-time highs. But there's definitely been a divergence between Bitcoin, gold, and silver versus the stock market. And again, how long can that go on? And listen, gold and silver, in all fairness, they trade almost as safety assets. So you could almost expect, like, it almost makes sense why gold would pull back. Okay, well, people are being like, all right, I'm going to grab my money in gold and put it in the stock market because that's the hot play, right? It's risk on. But Bitcoin, Bitcoin's not really a safe haven asset yet. It's definitely not. It still trades generally with the market. And I do wonder why it's acting like it is. All right. So don't forget, guys, next week, Fed decision on Wednesday afternoon with Jerome Powell conference call. Throughout the week, we're going to get a ton of earnings, so lots of trading opportunities. I'll be trading it right here at Verified Investing and keeping you up to date in the My Trading game plans, mornings, Monday through Friday at 9 a.m. live on YouTube, right on our homepage on our website. You guys have a great rest of your day, your great weekend. I again appreciate each and every one of you. Have a great one. Take care.